Hey everybody, it is Chuck Barone on Monday, September the 16th, 2024. Another week of madness. Man, isn't this time just going by quick, man? Half of September is over already. I told you guys, once football season starts, man, start flipping weeks go by really quick. Here we are, middle of September, end of the third quarter coming, all kind of crazy stuff going on. We got a lot to talk about today. Before I get started, though, let me have to take a half a second. Welcome everybody to the show. As always, guys, thank you so much for your support, for watching the videos, watching the show. All you guys on the chat here, my usual suspects, much appreciated, everybody. Um, Interesting times, guys. Interesting, crazy, freaking times we're living in here. And we get to just kind of sit back and watch it all. We know exactly what to expect. We pretty much have been on top of, these. We know exactly what's going. Now we don't always know the results exactly. We have an idea of what to expect, but we know what's coming. There's no surprises, and usually, and we've been right. I'm telling you, if you guys have been following our advice, you've been riding this stock market up. Now, granted, maybe you're not making some big gains that you would have if you invested super aggressively. But with our conservative approach, your stocks, the dividend payers are up, man, big time. Not to mention the fact you've been collecting dividends for years on those stocks now. So your portfolio is looking pretty good. You haven't added new debt. You've been paying off the debt you have. You've been spending your money prudently. If you're doing the few little things we've been talking about, it's just time to sit back and watch the whole world go crazy and know that in most cases, it's not really going to affect you all that much. And that is a very satisfying thing, at least for me, in this friggin' madness we're living in right now, right? Anyway, I babble. Let's get back to markets today. Um, I think I like gold. I think it's going to continue to rise. Actually, I read a very strong article about gold today and why it's going to continue to go higher. I think gold is pretty good. I think, personally, I'm a silver guy. I like silver because you can get so much more bang for your buck, right? 1 ounce of silver is $2,500. You invest that same 2,500 in gold or in silver, you're getting 75 ounces or whatever, 80 ounces, whatever the number is. So every dollar that silver goes up, you get $80 instead of every. But gold has been rising much faster percentage wise than silver has this year. That's why I don't say forget gold, go silver. I think both groups are really good. I think sooner or later silver catches up. The numbers right now, the ratios between gold and silver are way outrageous, and I think silver going to catch up sooner or later. I'm no Nostradamus with a crystal ball here. I don't know exactly when, but both of these are going to continue to rise. Faux show. All right, let's talk about markets today. Now we know we got a big week this week. We got the Federal Open Market Committee meeting starting tomorrow. Wednesday, Powell's going to announce their rate cut. Everybody holding their breath. Is it going to be a quarter? Is it going to be a half? Everybody placing their bets. So today and tomorrow are going to be kind of weird days on the market as everybody kind of gets adjusted to what they see happening on Wednesday. So today we had a really weird mixed day. We had the stock market was weird today. The Dow Jones was up 228 points, 41,622. The NASDAQ was down 91 points, 17,592. And the S&P ekes out a small gain of 7 points, 5,633. So even though the NASDAQ lost a little money today, the techies are a little bit different, right? Market basically in neutral today, not much happening. And I think it's going to be that way until we get some either information leaks out of the Fed meeting or we get Powell on Wednesday. Then you'll see markets move. Bond market today, 10-year bond falling 3 basis points, sitting now at 3.62%. So yields continuing to fall, which is crazy, guys, right? I mean, yields falling on bonds. The 2-year today was unchanged. Again, a weird day, right? So the 2-year doesn't move at all, sitting at 3.55. So you got the inversion has corrected itself. The 10-year is higher than the 2-year now. And both markets kind of just sitting in neutral until we see what happens to see. We're going to get retail sales too. That'll be tomorrow. That's going to be interesting stuff too. So we got some data coming this week. It's going to move these markets around a little bit. The dollar today got beat up a little bit, down 42 basis points on the index, 100.70 now on the dollar index. Got to stay above 100, guys. We don't want it to go much lower than that. I think that now the dollar moving because they're pricing in this extra, moving it to a half a point cut rather than a quarter point. We'll see what happens. It's going to be fascinating stuff. Precious metals today, quiet day in precious metals as well. Gold futures rallied up well above 2,600 today, but spot price of gold up $4.50, $2,583.20 for an ounce of gold. Silver up just 2 cents today, $30.82. But every day above $30 is a good day, guys. Disappointed they couldn't rally up a little bit more than this, but we needed to hold this $30 number now to build it to support rather than resistance. Where we're under 30 trying to break through, that's resistance. Now we want it to be support where we're above 30 and we don't want to fall under, right? Anyway, silver needs to consolidate and it looks like it started today. Oil today rallies up a little bit, up $1.44 a barrel, sitting at $70.09 per barrel for a barrel of West Texas Intermediate. Gold or oil sitting right where we expect it to be, guys, between 70 and 75. It broke down under 70 for a couple of days, but now it rallied right back up, and this is kind of where we expect it to stay. I think it might break out to the upside or the downside occasionally, but it won't be anything to be concerned about. It'll find its way right back into this trough. And Bitcoin today. Well, Bitcoin is not holding on as well as silver is, guys. Bitcoin falls $2,016 today, sitting at $57,765. So we were trying to get Bitcoin, like silver, above a resistance number for Bitcoin at 60,000. It was right there, couldn't break it, falls back today. So now we'll see if it's going to go down and touch the support at 52, bounce, or it's going to turn around and try to make another run at 60 before it reconsolidates its support. We'll keep an eye on all of this stuff for you guys like we do every day. All right, like we do every Monday, here's what's coming this week. Today, not much. Empire manufacturing data was down again. Now, this is manufacturing numbers only for the state of New York. So manufacturing New York down again, guys. It really hasn't been strong there. I think that, New York needs to look at some of its tax stuff and some of the deals that they have, a little unfriendlier to business. Manufacturing moving elsewhere, obviously. Empire manufacturing down. Tomorrow's going to be a big one, guys. Tomorrow, the open market committee meeting starts, so all the big shots will be getting together. Tomorrow, we're going to get retail sales, which are expected to be down. Now, I got to see that, and I want to see if they are down, how much are they down? We're going to get, what's interesting is if you take autos out, so they do retail sales, then they do retail sales excluding cars. Retail sales excluding cars up. Cars in a tough market right now. Prices falling like crazy. We're also going to get business inventories, which are expected to be up. Capacity utilization expected to be up. And industrial production also expected to be up. So tomorrow is going to be a pretty big data day. On Wednesday, Powell Day. Forget about it. We'll get a little bit of real estate information that day on building permits and housing starts, both expected to be up. But Wednesday will be all about Powell and the Federal Reserve. Thursday, jobless claims. Expected to come in again this week at 230,000, same number they expected last week. We'll also get Philly Fed data, interesting stuff always. Existing home sales expected to be down. Leading indicators also expected to be down. And on Friday, we all get to take a deep breath because there'll be no major data, at least that they're reporting, data coming out in the Wall Street Journal for Friday. All right, so let's talk about stuff this week, guys, because it's going to be a crazy one. On Wednesday, we get Powell. So this is the week This is what everybody's been waiting for. When are they going to cut? When's it going to happen? Boomity bee, how much? Now we're going to get it. It's going to happen on Wednesday. Now the question being still, will it be a quarter? Will it be a half? People placing their bets. Most of the conservative people, I think, believe that it's going to be a quarter, that the Fed's going to play it conservatively. If you really look at some of the economic data that's important to the Fed, and that's why I think that what they know a little bit more about we do about this jobs market, if they really have a concern that we could be sliding toward recession, we could see a half point cut on Wednesday. And I think what happens, the problem with that is a half a point cut going to signal to the market that the Fed believes they have to head off a recession. And that could really spook the stock market big time. So it's going to be really interesting because if they really need a half a point cut, and they know better than we do, if they really need a half a point cut and they only cut a quarter, now they could really risk damaging the economy because they're going to be too slow to get rates down to save it before it tanks into recession. So Powell got, again, he's Wallenda with the friggin' high wire act. He's got a super fine line to walk this week. It's going to be really interesting to see how he does and what he has to say, because as much as what everybody looks forward to is what they're going to do this week, but the comments on Wednesday when he holds his press conference, that's where typically he's going to leak a little bit of forward guidance about what they're feeling about their next meeting and what they're feeling about cuts, economy, important stuff. That really is almost bigger on Wednesday than what they're actually going to do because the market's already pricing all of that in. But that's all everybody's going to think about until Wednesday, unless retail sales come in spectacularly off. Now everybody's speculating. Everybody placing their bets. You could see by these wild ass markets today, it's going to be place your bets now, speculate, and then as soon as everything happens on Wednesday, react. More trading. It's going to be great, man. Also, guys, consumer data today, getting a little bit of consumer data from the Wall Street Journal. Not good news, man. More and more consumers falling behind on payments. Duh, right? They want to continue to tell us how wages have gone up more than the accumulated inflation, to which I got to call bullshit. Showing up now, and especially in the bottom half of the income people, say 40,000 or less people starting to really struggle with payments now, having difficulty keeping their payments current. Credit card delinquency is jumping big time, guys. Now over 9.1%. This is higher than it was pre-pandemic, right? We all know that everybody paid credit cards off like crazy during the pandemic. Post-pandemic, everybody boom, 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 spend, 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 credit, credit, credit. Delinquency is at 9.1%. Credit card interest rates now at 21.2% is the average credit card interest rate right now. They're going to continue to rise, delinquencies in credit cards, as more and more borrowers are carrying balances on their cards. Typically, a prudent user of credit cards will pay, he'll charge and pay. So charge 500, pay 500, zero it out, you don't pay interest. People, if you can afford to do it that way, if you're good with your money, those people are not having any issues. But now you start carrying balances, it gets easier to pile those balances up, a couple thousand. Man, the payment's only $100. You don't realize you're paying 20% interest on that. So you borrow 1,000, you pay back 1,200. Really? And these guys, they got everybody by the short and curlies, man. As people more and more needing to use credit cards just to make ends meet, guys. Crazy. More and more people carrying balances. This is the highest rate of delinquency on credit cards in more than 10 freaking years. Of course, it's the poor people paying the price. Poor people sucking it up. They're suffering the most. They're having the most difficulty. Not a surprise. Here's the rest of it, though. Auto loan payments are also a struggle. Late payments climbing again. Charge-offs spiking like crazy. Late payments on car now almost equaling credit card late payments. Charge-offs, people turning their cars in, spiking. Car values plummeting. Used car values, which were actually up. I was laughing about it. You guys remember. Really crashing. Now, nobody wants to buy cars. They're way too expensive. Car insurance, too expensive. They can't get the deals they were getting to buy a car on super low interest rates. So people don't want cars. You've heard me rag on it about many times on this show. $700 a month average car payment. 20% of the people in America now have car payments more than $1,000 freaking dollars. Really? Okay, guys. So what happens now? The banks, these delinquencies eat into their profits very, very quickly. Because now not only do they have to deal with not collecting the money they already basically pre-spend, but now they got to take action, and it costs them money to try to collect these delinquencies. They want to keep these accounts. They don't want them completely walking away from them. People turning in their cards, turning in their credit cards, turning in cars. It's all going to crap. And it's going to continue to until, I don't know, poor people get rich, poor people make more money, poor people stop living on credit. When I say poor people, I mean basically up to the middle, from the bottom of the rung to the middle class. Anyway, guys, gold. Last thing before I wrap it up today. Gold, 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 guys. Big article again, Barron's, talking about gold is on what they called escape velocity. Their analysts expect gold to continue to fly. Why? Everybody cutting interest rates, which tanks their currencies. They believe there's going to be a fight to get currencies even lower for trade purposes. You've got sovereign, you got central banks and central government buying up gold by the ton, Russia, China, and other countries. You got the season coming along where jewelry, India, and other places that are big users of gold. There's just gold, everything lining up beautifully for gold, guys. And this article making it perfectly clear that you should have some exposure to gold, whether it's actually the metal themselves, whether it's an ETF, whether it's a mutual fund, whatever it is. 10 to 15% of your portfolio for that kind of stuff, guys. So if you're going to have more than gold, you don't want to put it all, you don't want to get anything more than 10 to 15% of your portfolio and anything speculative. And sorry, in my world, gold is still speculative. Anyway, guys, that's it for the day. As always, man, thank you a million times over for you guys' support. Thanks to everybody on the chat here. You guys are cool. I appreciate it. Tomorrow's another day. Well, tomorrow will be a little quieter, but we'll be looking at retail sales. We'll see how that goes. And Wednesday is the big Powell day. Anyway, guys, that's it for the day. Get off on Monday Night Football. Everybody have a great evening. Back tomorrow to bring you the news you need. Hit the thumbs up on the way out, guys. It gets our video out there. We need to get some more views, man. Help me out, guys. In the meantime, tomorrow's another day. Till then, everybody, take care.